An absolute return fund typically targets a real return above inflation. The Sum Inflation Plus fund targets real return about 4% after fees. We've got a dual mandate. Second to the real target would be protection of capital. And we aim to protect capital over any 12 months. What's very important for absolute return funds would be the philosophy and style of the manager. Some managers, run aggressive balance funds. Some managers try and aim for cash plus alpha. So I think when deciding and when picking a manager, make sure you understand their philosophy and investment style in managing absolute return funds. The principles we use in managing the Sum Inflation Plus fund, we've got a couple of them. First and foremost would be diversification. I always say in investments, there's no free lunch except for diversification. And typically what we do is we would sell expensive asset classes and we would buy, cheap asset classes. How do we decide whether they're cheap or expensive? That decision framework is from our pragmatic value philosophy. Second to that, we use a dynamic asset allocation process. So we move in and out of asset classes. And we also use derivatives on a tactical basis. I think the last point that's quite important for me would be, the difference between absolute return funds and low equity balance funds. With absolute return funds, we try and limit downside as well. So we do focus on drawdowns and low volatility, high risk adjusted returns. So, I think there's quite a bit of a difference between the two types of funds. The current positioning of the Sum Inflation Plus fund, is probably slightly defensive at this point in time, specifically on the fixed income side. If you look at nominal bonds, as we speak, is trading about 7.9% for the 10-year bond. Our fair value is closer to about 8.2, 8.3%. Similar to that, inflation-linked bonds are trading at about 2%, between 2 and 2.3%. Our fair value is closer to 2.5%. As you know, cash is trading is at about 5.5% yield, which also means it's not even beating inflation. So on the fixed income side, there's definitely no, I think, easy returns to be had. That is why our bias is still with equity. Equity is fairly valued at this point in time. We like hedged equity as an asset class. And then if you look at the international side, we like European equities. Low price to books compared to the US counterparts. And the European companies have also got quite a diversified earnings base. If you compare them to the Asian and US counterparts, I think a lot more diversification from the income stream. I think the Sum Inflation Plus fund is ideal for investors that's looking for some growth, some real returns over 3 years, but also look for a capital protection element. We do focus on protecting investors' capital. We're maximizing yield at the moment, and I think it's a good fund to be in. We also deliver high risk-adjusted returns. So definitely in this environment, if you're looking for a well-diversified fund, have a look at the Inflation Plus fund.